In 2020, for the first time, more than half of all Nigerian adults were using formal, that is, regulated financial services. Data from the Enhancing Financial Innovation and Access in Nigeria survey in 2020 showed that 51% of Nigerian adults were using formal financial services, such as banks, microfinance banks, mobile money, insurance, or pension accounts. This is up from 49% in 2018. This has largely been driven by growth in banking, with 45% of Nigerians banked in 2020, up from 40% in 2018. Growth in digital financial services and agent banking highlights opportunities to drive faster progress towards financial inclusion, particularly for excluded groups such as women, rural, and northern Nigerians. Although financial inclusion has grown in the past decade, Nigeria fell short of the National Financial Inclusion Strategy target for 2020. The country had aimed to reach 70% of Nigerians with formal financial services by 2020. The actual figure was 51%. With the growth of the fintech space comes concerns about who is exactly operating in that sector. Aside from falling short of its target, Nigeria also had to worry about the proliferation of unregulated and fraudulent online financial institutions who have been defrauding Nigerians. And now the government is taking a stand. Recently, a number of illegal online banks were closed in an operation involving Nigeria's Federal Competition Consumer Protection Commission in collaboration with other agencies. And the Securities and Exchange Commission also sealed the premises of 3 companies for illegally exchanging or engaging in capital market activities. Today, our focus is on Nigeria's clampdown on online financial institutions. This is Business Edge. I'm Tolulope, Adeleru-Balogun. Joining me today is Dr. Soji Akinyele. He is an economist and government relations expert. Dr. Akinyele, welcome to Business Edge. Thank you so much for joining me.
Thank you, Tolulope. Thank you for having me.
So we've seen massive growth in Nigeria's fintech space, and we've seen how technology is being used to bring financial services out of the brick and mortar banks and into the palm of people's hands with the phones. But what we've also seen is that Africa's largest economy still has 36% of Nigerian adults, or 38 million people, unbanked. So at this point in time, in 2021, why does this large percentage of Nigerians remain completely excluded from financial services, or even how?
Thank you, Tolulope. You must situate that within the context of a developing economy. When you think about Nigeria, with about 65% of the economy still in the informal sector, with about 80%, of the economy still operating within the SME space, so if you like, the micro, small, and medium enterprise space, you will agree that a lot of work still has to be done in order to ensure financial inclusion, as well as access to capital, which is one of the core challenges of driving small and medium scale businesses in Nigeria. So really the informal sector, which is still a very large part of the Nigerian economic machine, is what is causing this. And there still has to be a lot of ramp up from the government in terms of financial literacy efforts, access to capital, both from traditional lending methods and also the innovative, fintechs and digital mobile methods that we are seeing now, basically has to be enabled and supported in order to scale. So essentially the way to scale now, is to scale through digital, scale through technology, because, for instance, Nigeria's mobile phone penetration is over 100% in a sense. Virtually every Nigerian has at least 1 or 2 phones. So it's easier to, transmit services, if you like, through mobile technology.
All right, so you talked about access to capital, and this conversation really involves the apps that are really giving people access to credit and loans, and yes, even capital for their business. And the area that fintech has been helping particularly has been this bridge between what was traditional and what is now. So if we're saying that it's the informal sector that largely has this issue when we contextualize the unbanked, is it also the informal sector that largely has the issue of access to credit when it comes to the Nigerian population?
Well, we are 200 plus million people. If you say 65% of the economy is informal, then it also means that about 65% of the population in some form, very loosely speaking, operates within the informal sector as well. So they are the ones having the challenges. You know about the poverty numbers, you know about the, literacy numbers. A combination of all these things suggests, that also access to capital, access to credit is a challenge, of course, within the informal sector. And that is where, again, like you've mentioned, the digital space comes in. I like the word you use when you say it's the bridge in terms of, access to capital. One of the challenges is that a bridge can both be a connecting, if you like, a connecting infrastructure or also a bypass. And perhaps what is informing some of the clampdowns that you are seeing now is that some of these digital lenders, are bypassing certain regulations or certain legal parameters within the Nigerian operating environment that they now need to pay attention to.
Okay, so you're taking me to the next question, looking at these operators bypassing regulation or the legal frameworks. And one of the things that the Director General of the Federal Competition Consumer Protection Commission said is that investigations revealed that some of these companies were neither Nigerian companies nor were they registered in the country. And they've been operating for a while now. So what does that say about the regulatory space, especially around this online money lending and online banking and financial institution situation we're seeing ourselves in?
It basically just tells us that, the regulatory space needs to, innovate as well. And this is not a challenge, local to Nigeria. It's global. Like I said, the beauty, if you like, of technology and innovation is that it's both a bridge and can also bypass, certain mechanisms. In fact, the mere definition of technology itself is to enhance human efficiency. So in enhancing lending, or access to capital, in enhancing, credit opportunities, you may have, bypassed what you call physical frameworks, in this case, legal frameworks. So what the regulatory environment really needs to do is to catch up, with this innovation. And indeed, a number of regulators have, begun to issue, if you like, laws and frameworks to guide, digital innovations within their sector. You know about the crowdfunding rules from the SEC, you know about the digital, and payment system licenses and all of that from the CBN, in the health sector and things like that. And of course, the FCCPC, since it was set up in 2019, has come to basically ensure, consumer rights are protected, communicate consumer responsibilities, and also check, anti-corruption or anti-competitive practices within the Nigerian business environment. So basically, regulation, needs to catch up. Regulation needs to bring, the digital players, if you like, to the table. And indeed, they have been doing that in recent times. We now know about even the Nigerian startup bill, which speaks to a lot of, fintech operations that has now been at least approved to pass on to the National Assembly. And then we begin to see some legislation, around how digital players operate within the country.
And we'll be talking to one of the main players regarding the digital startup bill on Friday. But does it concern you that a number of these lending platforms were able to be operated by the same person under different names, but also able to move money around and change bank accounts? If you look at the Soko situation last year, the company basically just disregarded what NIDA told them to do and gave customers a different bank account to be paying into while the other one was frozen. And Nigeria is a country that wants to fight money laundering. We want to plug financial loopholes. We want to basically tighten up financial regulations. Doesn't this raise serious red flags?
Indeed, it is concerning, and that is why, I know people don't say this often, but that is why you must commend at some point the regulators and the government for thorough investigations that have led to these initial enforcements. It is because of concerns like this and complaints from consumers, and investors that have brought, these clampdowns to the table. So you're looking at the FCCPC along with a joint task force enforcing on 10 digital lenders. You're looking at the SEC enforcing on about 3 supposed capital market operators. It is these concerns that is now making the government basically, look at this better and see that, look, as much as we want to create an enabling environment for business, we must also do that within the framework of protecting consumer and investor rights.
All right. So we're going to take a break here. And I like the fact that you say we want to do this within protecting consumer rights, but also creating an enabling environment. Because the reason these apps have become so popular is because of how difficult it is to get an instant loan in Nigeria. And we'll talk about how traditional financial institutions have also stepped into this and the contrast between how they handle things. So Dr. Akinyele, please just hold the line. We're looking at Nigeria's clampdown on online banks, and just a few days ago, a number of them were closed here in Lagos and found to have been operated by the same person, but just under different names. Now, the country has also asked Google and Apple to actually take down many of these apps from the online stores so that Nigerians can be just a bit safer. We'll continue the conversation after this. My guest today is Dr. Soji Akinyele, economist and government relations expert, as we look at Nigeria's clampdown on online banks. Now, in 2020, at least half of the 22 existing Nigerian commercial banks started offering instant loan products without collateral, something unheard of years ago. This came about because of a Central Bank of Nigeria directive on loan deposit ratio. So the banks offer instant loan products without collateral at risk of high repayment default rates. But unlike digital lenders, these big commercial banks can actually, in a way, afford these types of loans and also afford the loss on them, considering that they make tens of hundreds of billions of naira in profit. So Dr. Akinyele, when you look at the contrast between how long it took traditional banks to sort of offer this same service that has become something that has opened up the space for many fintechs right now, and then you also look at what they're offering and how they can sort of write off the loss versus how the digital lenders, the real digital lenders, can't afford to write it off. What do you make of this contrast, particularly for the consumer who's in the middle of all of this?
I think, starting from the consumer only stands to benefit, and I say that cautiously because there are also risks attached to that. But if you look at it, it's one of the, again, beauties of innovation and technology. The moment innovation, comes into play, it basically, shakes the tables and ensures that even traditional lenders sit up and also innovate along. And so you've seen a lot of them also operating this kind of consumer credit services. And when you say without collateral, largely, there's a risk or a credit analysis to it that makes them, so for instance, tied to income, tied to salaries, and things like that, as opposed to actually physical assets, that used to be then real estate, mostly, in times back. And I think that, for the consumer, really the benefit is that you then now have, an option in terms of access to financial services, albeit still not enough. We still need to push that agenda up to, like you were mentioning, the FSS 2020 targets. But you now have access to a multiplicity of lending options, and then it is now your responsibility, as a consumer, and this is where the FCCPC comes in communicating consumer rights and responsibilities, to do due diligence, whether it's for investments or for lending or even for savings. It's important that you do due diligence to understand the terms of the transaction, as much as possible, seek financial advice, so that when you are getting into these transactions, you're able to understand what you're getting into, and being able to, of course, service the transaction from your own part. This is not denying the fact that a number of these lending institutions, as we are speaking about today, have basically gone ahead to couch some of their services in a way that violates the legal frameworks within Nigeria. According to the reports of the FCCPC, we note that some of these lenders were unlicensed, unincorporated, offering exceedingly high interest rates, and things like that.
And that's my next point of call, mentioning consumer responsibility and education. So one of the big issues that came up was also, as you said, the high interest rates. And sometimes this is a high interest rate with repayments within 2 weeks or even 1 month. And then also the issue of digital privacy, when those who quote unquote defaulted would have their friends and anybody who's on their contact list inundated with messages of either being called a thief or being on the run. So all this conversation is bringing up more about consumer responsibility and education. How do we bridge that gap? Because as a low-income country, as a country that has a very high poverty level, we saw a rise of these apps mainly when the pandemic hit. But people were, in many terms, desperate to get their hands on this money, whether it's for school or their business or even health. And the terms and conditions, as you said, sometimes were not in plain, simple English. They were in ways that would give you access to contacts and then let you inundate the contacts. I've received these messages and I'm like, who is this person? I don't even know the person, but I get the message calling this person a thief, that they've defaulted. So where do we come in terms of educating consumers on their rights and their responsibilities when it comes to fintechs? Because this is a space that is opening up at massive levels here in Nigeria.
Thank you, Tolulope. So the first thing to accept really is the present, in the sense that the fintechs are here to stay.
Yes.
The fintech may not even be the future anymore, it's actually the present. So in the sense, the government and regulators need to accept that and basically create again an enabling environment where they can thrive, based on the framework that the fintechs actually use to operate, which is technology. So leveraging technology and the efficiency that it brings to services and processes, especially financial services, needs to be properly understood and then regulated for, if you like, by the regulators. The second thing then to note is that, look, when it comes to financial literacy, we need to push that agenda as seriously as we push a political agenda. And I say that with the caution that this is a pre-election year. But the question really is, if you were saying, what should the government do? I will throw that back to the government and say, how do you get people to vote? How do you campaign for elections? How do you go all over the country and ensure, that you are campaigning in all three major languages or even more? So that's the same way you should push financial literacy. That if you treated it like a political campaign, then perhaps we'll have far more people, financially literate and able to understand their rights. So of course, you must understand that agencies have their budgets, their communication budgets, and things like that to play with, among other, services that they provide. But it is important that communication of policy and communication of, if you like, government services and public information should be prioritized. And we have a number of communication agencies that can do that, from the orientation agency to the state-owned television stations and radio stations, from even private television stations like yours. These are things that should come up, especially in the developing economy where we know that literacy level is very low. Then we should ramp up on it and ensure that the customer and the consumer, is educated as much as he or she should be in order to empower them, away from, any exploitation, especially in the financial services sector.
So let's look at the issue of legislation, particularly in this situation. So in December, Kenya's President Uhuru Kenyatta approved the amended Central Bank Act of 2021, which gives the CBK authority to license digital lenders, as well as ensure the existence of fair and non-discriminatory practices in the credit market. Now, lenders are now required to apply for licenses from the bank as compared to before, when they only had to register their operations in the country. And Kenya is, we might say, a few years ahead of us, because Kenya's mobile money sector and this digital fintech space, they've really moved and progressed a lot in the past decade. Should we go the Kenya route? If it's legislation on digital lending, even though we've started seeing some of it, what would you expect in order to protect this industry and also protect consumers involved?
Okay, thank you, Tolu. And as a patriotic Nigerian, I'm not so sure how far ahead of us Kenya is, particularly in the fintech space, considering the amount of investments that have come into that space in Nigeria in the past 2 or 3 years. You're talking about over 5 or more unicorns in Nigeria, all operating within the fintech space. So that's just a side. But I hear you. Nigeria actually has, similar frameworks where. Ideally, for instance, a lot of these digital lenders, actually have to be incorporated, first by the CAC and also receive some form of banking license, agency banking or microfinance banking or merchant banking or regional banking. And we've seen some of the, let me use the word, serious digital lenders, those who really want to do business in our country, go about the licensing processes of the central bank. Some have acquired microfinance banks, and by that acquisition, basically reversed the license of the microfinance bank into their own operations, thereby making them a microfinance bank and able to do operations. So really, it speaks to an investor, understanding the terrain in which you're coming to play, understanding the regulatory provisions, the regulatory environment, and by extension, the regulatory risk, and your decision to be able to come and play in that environment because you've seen that the benefits far outweigh the risks. And if then you are serious to do that, then you should play within the ambits of the law. Of course, even as we then ask the law, and legislation to also innovate to modern day practices, as you mentioned in the likes of Kenya.
Okay. Dr. Soji Akinyele, will end the conversation here, but I know there's more to talk about when it comes to this fintech space and, of course, how much investment is coming in and what investors are looking for in Nigeria and across the continent. It's a pleasure having you for the first time on Business Edge, but I'm sure it won't be the last.
Thank you. Thank you for the honor.
All right. Have a good one. And that's what we know right now. We've heard from the FCCPC that these are not the only online institutions that are under their radar, but this is the beginning of cleaning up the sector. And it's for the protection of Nigerians, but also for the growth of the industry. We'll be watching very closely to see how things play out. You're watching Business Edge. Up next is NC4 to watch. And we start with a few stories we're keeping our eyes on from South Africa, where the National Union of Metal Workers of South Africa, as the majority union at ComAir, has said it will be picketing outside the offices of ComAir to demand that the board remove the CEO, Glenn Orsmond. NUMSA said that its members are fed up with ComAir putting profits before people. They add that the management has resulted in the South African Civil Aviation Authority suspending ComAir's operating license indefinitely because of safety concerns. And staying in the country, South Africa's domestic natural gas and helium producer Renergen will acquire funding to the tune of 200.6 million rand from mining development company Ivanhoe Mines towards the upscaling of the Virginia gas project in the Free State. Ivanhoe will hold a 4.35% initial stake through the placement of over 5.6 million shares at 35.625 rand per share. According to a new document released by the regulator, the Central Bank of Nigeria has begun a big strategy to wean deposit money banks off the historical risk and cost of cash management. Concerns have been made by the top bank experts and industry players about the rising expense and hazards of cash handling. This resulted in different policies geared at promoting cashless transactions, with current and former central bankers recognizing that the system must find a method to decrease the cost and the risk. And finally, President Uhuru Kenyatta is due to open the 32 billion shilling second container facility in Mombasa later this month, firmly establishing Kenya as the regional hub. The terminal, which is expected to open in the coming months, will be able to handle an additional 450 20-foot containers, bringing the total handling capacity to 1.7 million from 1.42 million currently. And those are the stories we're keeping an eye on for you right here on Business Edge. Don't forget, you are, of course, watching News Central, where we put Africa first. I'm Tolulope, Adeleru-Balogun. I'll be back again 11 a.m. West African time with more African business, the economy, and finance. Do stay with us.